What do you think is the biggest thing that's on hedge fund managers' minds right now?
I think they're wondering about QE. They're wondering about the market and whether it's going to maintain this sort of endless upward focus that it's had. Because it's been rocky for the past month and change, but you've had, a straight series of years in which understanding different stocks' relative value was not as valuable a skill set as simply knowing which way to go directionally. So right now, I think you've got people who've played mortgages, who've played equities long, who've played some other sectors where it's been kind of obvious that the assets were going to reprice upwards. And now you have more of a relative value situation. So what I'm wondering about from the standpoint of an investor is sort of which strategies to rebalance into, because you've seen commodities get crushed, you've seen managed futures firms do very poorly, except for our nominees here, and you've seen equity funds generally do well, slightly underperform the market because they're a little reserved. Now you're seeing a ton of money enter equities. And so is that money going to go to the right equity funds? Or is it going to relative value? Is it basically trying to make a leveraged play on increasing beta rise in the market? To me, that's what the investor's looking at.
There are a lot of people here that have made a lot of money post-crisis, mining financials, mining mortgage-backed securities, even mining European distressed debt here and there. Will they have to change their tune? Is there a new normal that they're going to have to adjust to? And are we going to see people wash away because of that?
I think you'll see people who had made quite a lot of money in some niche strategies who can no longer expect to make that much, and I think they know it too. And the interesting thing, of course, is that as much as people try to go for performance, they're interested in actually making an authentic return, there are a lot of businesses that are based on those asset values simply going up. Irrespective of whether or not the manager thinks that he has a gigantic edge playing in that field anymore. So in mortgages, you saw a ton of people get into mortgages, and I still think there are some managers who can eke out a small return or can make a large return in some esoteric assets. But no, I don't think, it really depends on the market. You've had some amazing markets for distressed, and you may still, you're going to see a lot of companies swallow each other because the earnings aren't there, so you may see activists make quite a little, a lot of money, but sort of straight long-short equity might have to struggle. I think commodities is going to continue to struggle because people are not really sure about global demand, and you're going to have problems in systematic strategies that are looking for trends because we're in a new universe in which no trend seems to last very long except the trends of governments printing tons of money and supporting their markets. So,
last question, fees, are they going down? Is this a new state of the industry?
You always hear that, and our data doesn't necessarily show that, as you know. What it does show is that the sticker prices are relatively stable. They dropped a little bit after the crisis. The problem of knowing is that you don't know what the real price is. You don't know what all the pensions are getting, if they're getting side letters or special agreements of some kind, or if somebody's an anchor tenant, basically, and they're getting some reduced fees. But on the whole, I don't think there's been sort of what everybody expected, which was some 20 to 50% decline, or some sort of repricing of hedge funds, because people still want to pay for performance.
So 2 and 20, 1 and 5, or 1.5 and 20, that's something
those
we
are still
can
the medians.
maybe
Those
try
are
and
still
see
the
in
medians
future.
that we're going to see. You're going to see definitely some funds that think that they can do it, but it's weird. You're selling a high-end product, and so it's just like luxury goods. You're not going to see somebody try to sell more luxury goods by saying now they're $20 because it devalues the product. A truly great hedge fund should be able to charge almost whatever they want as long as the net return is exceptional.
Right. Well, thanks, Josh, so much for giving us your views on the industry, and great night at the Absolute Return Awards.
I had a fantastic time.